Okay, good morning, everybody. If you can hear me and see my main screen, please say yes in the chat box. Cool, thank you. Good. All right. Good morning, everybody. I'm moving a little slow today, so bear with me. Getting everything set up. This one's a little tricky to do because we have to move around on my 4 different screens here a lot, so. Okay, well, we've got a good turnout. That's nice. There's a lot of people doing these that aren't doing these live, and I'm trying to move all the session times around so I can get as many as possible. So far, the mornings seem to be the best attended as far as attended live. All right, a couple of housekeeping parts. For some unknown reason, there still are a substantial number of you that are not joining all the channels. I don't understand this. For example, in Setup Open 5, there's some really good conversation going, and there's still 2 people that aren't there. The way you find the channels is you click on channels, and then you will see a list of all of them. Please join every channel. There's no way you're going to get what you're here for out of this if you don't do that. And I set it up when we first started so that when you join the Slack, it would put you automatically into the channels that we started with. But we're constantly adding new ones. So, learn how the platform works, guys, or you are going to miss out on a lot of material. And if you think you've joined all the channels, please go back and check, because a lot of you haven't, even though you think you have. Okay, enough about that. You should have this form. I have a blank version of it and a filled in version of it on this computer. Let me just show you the blank one real fast. If you don't have this in front of you, get it. It's posted. Let's see, I think that's still there. Yeah, it's posted in the Slack. It's just a template for you to use as you do what I'm going to talk about on my machine. It's critical, guys, to understand how important process is in continually doing this day in and day out successfully. And by successfully meaning, making money more than you lose money. And I've talked about this just over and over again about making things that you can make mechanical, yet at the same time, the things that you don't want to make mechanical, like the art of reading order flow, you have to leave a little bit of interpretation, room for the art. Your screen layouts is one of the things that can be completely mechanical. So that's the point of view we're coming from here. Your brain is trying to process all this information and make decisions based on it, and at the same time be mindful of its own biases and take those into account in the decision-making process. So I know, particularly if you're younger, that you probably think this isn't too much information, but every little element on your screen that you can get rid of will make you that much better at making those decisions. Even if you're young and you think you can multi-process. Trust me, I multi-process as well as anybody, and this was the most productive thing that I did after I had kind of nailed down my approach to the markets. I started building processes around my training, probably early 1980s. I guess I'd been trading about 10 years, and I was out of college then, and I understood a little bit more about how businesses modeled processes and that trading was truly a business, and I wasn't just, like doing this, like pulling a slot machine lever, which, there's an element of that you have to be mindful of too. There is a gambling piece to this that the people that don't understand what you do won't get that. They'll think you just gamble. But the people that truly understand how gambling works and the science of game theory and odds will understand. So if you put everything I'm going to say today into that context, simplify it and make it part of your decision process from the perspective of math and the odds. So every element has to contribute to that positively, or it simply has to go away. That's all there is to it. So with that introduction, I am going to, okay, somebody got in here and isn't muted. I don't know how that happened again. Sorry, guys. Give me a second to pull up the list and see who it is. Please check and see if you're muted. I have it automatically muting everybody, but for some reason, somebody slipped through. Let's see who you are. Oh. All right, I think we got it. I'm still not sure who it was. All right. Please make sure you're muted. I should have it set so that you can't unmute yourself, but for some reason, there's somebody that got through that screen. All right. 1 second here. Again, I apologize. These controls that are on the meeting rooms are really bad, and they're exactly the opposite of the webinars. And I have yet to be able to find a way to get a little, there's a little floating bar. Oh, it's Oscar that was unmuted. All right, whatever. Okay. This is frustrating, guys. I know, I apologize. Keep yourself muted, and this platform stuff is really frustrating for me, but there's nothing I can do about it until I can get rid of one of these monitors and dedicate one to this chat stuff, and I haven't been able to do that yet. Give me one more second. Okay, let's see. All right. Now I think we can go ahead. All right, pull out that piece of paper that I asked you to have in front of you, and let me just really explain briefly what the purpose of this is. Every one of your charts needs to have a primary purpose. So what are you looking at that thing for? And a lot of you are struggling with understanding what you're seeing on the domes. So I'm trying to give you kind of a reference framework to see what I'm seeing on the domes on charts. That was why we went through that whole linear regression thing, and that's why we're doing this today. And this is also kind of the beginning of learning how to tape read. So I'm going to go and take one example here. Hang on a second. This thing keeps moving on me. All right. Let's see. I believe we want, let's use this one. Okay, you guys should be over here on my 6 now, and of course the bar disappeared again. See, this is the thing that keeps disappearing, you guys. There's this floating bar, and it won't stay where I want it to so I can monitor this and see what you guys are asking me. All right, here we go. Now, I think I have it so that I can watch your questions and actually do this webinar. Okay, so these are, there's actually a couple behind this too, but every instrument that I trade, I look at it from the context perspective out. So in order to do that, you have to understand that behind these two, there are 2 more charts. So what I'm gonna do is just scoot these down for a second so everyone kind of understands what I'm doing. All right, these are the charts that I always refer to as context. So if you're looking at this form, you put on here, okay, what's the first chart we're looking at? Is the 30 Renko for ES, or for the NQ, I use a 75, but the purpose is the same. So what are the elements on this chart? This is a Renko chart, and a Renko chart is, can't see the screen. Screen, I don't see the charts. Okay. What are you guys seeing now, please? Tell me that. We can see it now. Okay, please be specific when you post comments like that, because I don't know. Yeah, okay, now you're saying, all right. Yeah, because of this problem with this chat window disappearing, guys, I don't know when you said that sometimes. So please say that as it's happening, and yeah, exactly, be specific like Helios just was. All right, so you're seeing them now. Okay, so back to it. So within the context of this document and building the process, these two, both the Renko and the range, and every element on them is really just about context. So the chart is, for example, and there's one of this for each instrument, by the way. So I'd make one sheet for each instrument. So the ES Renko chart, its purpose, the entire purpose of this chart is to show if there's any kind of dominant trend, and then I threw a volume profile on it, and this volume profile is set to the range of the entire chart. So I'm just looking to see where the high volume nodes are, only for the purposes of context. Okay, so that is it. We are done with the Renko chart. It has two elements on it. It has a Renko, which shows a trend, and it has a volume profile for the entire range that the chart is displaying to see potential high volume nodes. That's it. Done. You never look at that again. I look at that in the morning, and that's it. I never reference that during the day unless we're really moving and I want to see if we're approaching an old high volume node. Okay, the range views are similar, slightly different. On the range charts, what I'm trying to get a sense of is the opening 5 minute and 60 minutes first hours on each of the last few days. And depending on how volatile we are, sometimes I expand and contract this a little bit. But the way it appears right now is perfect for today because I can see a consolidation area that we're kind of just breaking out of. And I can also see the last couple of consolidation areas, like this one here, this one here. Okay? So this chart has a similar purpose, but not exactly the same. So it has the next item down, I would place on here that my ES12 range chart, its purpose is to see the recent ranges that the market has respected, previous days and overnights. For example, somebody asked me, I think it was, who was it? Anton, I think, asked me in Facebook today if this was a potential overnight flip setup. The answer is yes, it is, because we have a run up overnight and the volume is relatively low. The ES is at 200,000 and change right now. So that's all I'm looking for here. So the elements on here are the opening ranges, the profiles day by day, not the collective one, and that's it. The one other thing I do here that's a little bit tricky is I use a data series of range, but I use a line on close type display. And the reason that I do that, I'll kind of blow it up a little bit here, you can kind of see. The reason I do that is because I'm not really concerned with bars here. It's hard to see on these monitors because they're vertical. What I'm really looking for, and the reason that I do that there is I'm trying to just get a sense of these ranges. The absolute tops and absolute bottoms of them aren't really relevant, but for example, here you can really see that's a ledge and that we're above it. And for example, if we were trading down here, we would see that's a ledge with a huge air pocket underneath it. So that's the reason I use these. One comment in general, these vertical monitors that I'm using, the portrait orientation with these BenQ high resolution QHDs. Some of my stuff, like for example, when I maximize, it doesn't actually look right. I'm still getting the hang of how I do that. If you bring it over to the monitor that isn't turned that way, my main one, it looks perfect. And sometimes I'll do that when I want to look at it. But it's easy to group them together, and that's why everything's over here. All right, let me slide this back up over that. And again, the reason it's arranged that way is because once I've looked at that for the day, I never look at it again. Then I really just need to be more in the moment. Okay, so I'll stick those guys. One other thing you may have noticed is that I switched these. I used to have ES over here and NQ over there, and that was actually wrong. I try to be really symmetrical, and my domes are arranged this way. And again, that was an artifact of when I had the monitor turned landscape. I wanted ES to be next to its dome, and now the whole monitor is next to the dome, so it's easier. All right, I'm going to pause here for a second and see if everyone understands where we're at right now. The purpose of each chart and why we're doing this. Because I'm going to go into charts now that have a lot more on them, and you need to start getting more specific. So I want to make sure everyone understands what we're doing. There is option for US viewers original size to magnify. Okay. I'm not sure what that pertains to for the webinar. Okay. All right. Everything was clear until now. Okay, please be more specific, guys. I'm trying to understand if this is something I need to stop and clarify, or I don't know what you're talking about. I'm asking if you're, all right, is everyone caught up? Okay. All right, guys, I don't need people telling me shortcuts for how to work my screens. And, okay, I get that some are saying that. How are the volume profiles separated on a 12 range chart? Okay. With the exception of this one volume profile that is the entire chart interval, all of my other volume profiles are always split into 2 sessions. The overnight and the regular trading hours. So you'll see that on the 5-minute. You'll see that everywhere else. Do you understand that, Darren? Yes. Okay, good. All right. I understand the range again. I'm not sure what you're asking me. Ask specific questions, please. Don't just ask me to say something over. I'm not going to do that. All right, moving on. So once I've covered up those context charts, and by the way, every other instrument's the same. So over on my other monitor where I have gold, and here, I'm just going to switch over there for a second. Oh, God, the thing moved again. Here we go. This is the thing I'm looking for. I know it disappeared. Okay, just wanted to share over here so you guys can see. It's the exact same way with oil and gold, and underneath their Renkos, I use a 30 for oil and a 10 range, and then for gold, a 40 Renko and a 12 range. I rarely adjust those. If the market's really volatile and we're having huge moves, you need to do that. But in this case, haven't done that recently. Okay, let's go back over to here. Okay, is everybody back on my screen that I have my mouse on right now with the SNNQ on it? Yes. Okay, the purpose of the range chart, Michael, is quite simple. I want to see what opening ranges we had for the last few days, because remember, that's a really significant part of the day. We either stay in it, or when we break out of it, we do it violently. So those are good to know, and where they were when we consolidated previously, when we have recently broken out. That's what we use them for. That's it. Again, it is context. We're just kind of getting an idea where today's price action is relative to everybody else's. Hold on, one of my alarms is going off, and it just whacked the screen share again. Okay. This will be easier when I move some of this to a different machine next week. Okay, hopefully you guys are still over here, are you? I think you are. Can you still see my ES and NQ? Yes, okay. All right, let's move forward. So now, once the day is going, this is the information that I want on these 3 charts for each instrument. And I rearranged this a little bit too. I've still got the tick fast ones at the top, but I moved my 30-second to the middle and my 5-minute to the bottom. And again, these portrait monitors are new to me, so I'm still fooling around with them a little bit. I like this because its fastest is up here, then the slightly slower time frame, and then the slowest time frame of these. So what it allows you to do is look at a specific area. Like if I'm down here looking at the 5-minute and I see, okay, we've been consolidating and building this bulge up here, but I want to go in and look at this area. That's this right here. So I've zoomed in on this spot. And then if I go up to the tick chart, I've actually just zoomed in right on the area that we're moving in right now. So it's a real cool way to keep perspective. And that's why I have this broken up this way. And with the vertical monitors, it really sets up nicely if you arrange them like that. It makes your eye naturally follow the differences in the time frames. By the way, we have something forming here. This is called a double distribution. It is frequently the setup for a flip. Anton was asking me about that. So this open will be real interesting to watch. I don't know if we'll still be going in this session at that point. Probably not. Maybe I'll start another one for the open. But anyway, so keep an eye on that. This will serve as like a vacuum, an air pocket here. So if we do get down there with any sort of momentum, we'll probably go through it pretty fast. Okay, moving on. Let's go through these one at a time. This chart, the tick chart on any of the instruments, and the intervals vary a little bit. It's 10 on everything except ES. And that's because I'm trying to capture ranges here. So the purpose of the fast tick chart, and it has a secondary purpose now, which is teaching you guys how to read the domes. But the purpose of this is not to see trend. These are not trends. The linear regression channels are gaming ranges. So the purpose of this chart is to see the immediate range, to see the price and volume, in other words, the order flow behavior inside of that range, and to get an immediate understanding of the sense of balance at this point. So if I were to start down here and look at this volume profile on the 5-minute, I would say, okay, we are perfectly balanced. And remember, we've talked yesterday, and there's some chat going on in Slack about, imbalances and the definitions of it. My definitions are really simple. I don't get caught up in, being really formal here. Like, we had a little market maker chat this morning too. Same story there. It's really simple. We're balanced here because all the volume is here and the price is here, and we're not going anywhere. We're ticking up and down. If you look at it on a dome, it simply looks like this. We have a symmetrical volume profile, and we're just playing around going nowhere. Okay, that is my definition of being in balance, or quote unquote, we have found value for the time being. Okay, so if we look at this 5-minute and we say we are in balance, then if we look up here at the tick chart, we should see kind of just ebb and flow within the range. And the NQ is looking a little more symmetrical at that. So, if we look at it here, you can see, the volume of these moves up and the volumes of the moves down is pretty similar. So let's go through all these elements and see what they actually are. These are 2 linear regression channels, and the purpose of those, again, is to define a longer range and then a range within the range. I am not considering the directions of these because they're misleading. This implies there's some kind of strong uptrend here, but there really isn't. We just are taking a statistical analysis of every point inside of here, and then we're saying if we go a couple of standard deviations that way and a couple this way, that's the boundary. So we're really just looking at the boundaries here of these ranges. That setting, I posted all these settings. I'm not going to go through settings in detail, but basically this one is 3 times the length of this one. This one's 40, this is 120. And the purpose there, again, is to just see the developing range within the range and to see the relative action. These are volume swings. So if I have, we've talked about buyers being aggressive. Aggressive buyers look like this. Volume is increasing while we're going up. And you can see that's not going on anymore. If that was continuing and we kept seeing that pushing up, that would be a different kind of behavior. Okay, so the purpose of this is to define the range, see the price volume activity within the range. I'm doing it a couple of different ways just to help my eyes stay focused on what it is I want to see. I've got these swing highs and lows. And again, remember, I'm putting this stuff on here so you guys can read the dome. I see most of this on the dome now. I really don't watch it over here. The delta bars is the same idea, but instead of showing it in terms of swings of the zigzag, which is what this is doing, it's showing it to me bar by bar. And so a collection of bars in the swing, I can see how we had this 1.9. It's these guys all here pushing it up. So price got up here to 88.5, and then they stopped buying. So this doesn't mean this is a short. It just means if you're long here, pay attention because the buyers have slowed down. It still looks like, reasonable setup for someone long. I'm not. I'm just saying, that's how you would kind of interpret this. But there's not a lot of energy in either direction. So. And then this is just pure volume. And the reason I have pure volume on this one is I want to see peaks. Like here, we had this buying, and then we had a peak of selling, and now we're going sideways. So that's why I say we're balanced. Nobody's pushing the price one way or the other. All right, I want to pause there for just a second. So that's everything on this chart, and that's everything we do with it, with the exception of this little trend indicator that's on here. And I'm going to talk about that in a minute because I know a lot of you are going to want to marry that trend indicator. But before I go to that, I want to make sure everyone understands everything else on here and what its purpose is. So one more time, the purpose of the tick chart is to help us see, as we would on the dome, pretty much instantaneous range behavior because we're looking at such a fast chart. I mean, this is literally just the last 20 minutes. And because we're concerned with order flow, that's a perfect amount of time. And we can see, you know, right now the buyers are kind of strong, but they've taken their foot off the gas. Okay, what's the significance of the colors on the zigzag numbers? Oh, that's a good question. I have those set to just kind of do the old high-low thing. So there's a lot of different ways you can set those, but I have them set to show me higher highs, lower highs, double tops, lower lows, that kind of stuff. That's what the colors are on mine. So it gets brighter when it's making higher highs on more volume. And there's a million, you know, again, configuring your stuff so that it looks the way you want it to is really, you know, building your own Bubba. But I found that, you know, I've used this setup to teach about 24 people now, not including you guys, you know, with these linear regression to understand the dome and using these zigzags. And I found that color scheme kind of helps people understand because you get the bright green ones when we're moving up and the bright red ones when we're going down. And so it's useful, again, just to keep your head focused on what the purpose of this chart is. That was a good question. Other questions on using the ticks? We may have to ultimately break this up into a couple of sessions because this is a lot of material, I get that. All right, since there's no other questions there, I'm moving on. The 30-second chart is identical. It has all the same stuff with one difference. I don't use dual linear regressions on here. I just use one, and it's just of interval 40. And the reason I do that, again, is because this chart up here is showing me this chunk of time, which generally is about 20 minutes. So if we look at here, that tends to be what is inside of a 40 period regression channel on the 32nd. So that gives me kind of a good way to transition from, okay, I see what's happening here. Let's go in and look under the covers of that range. Here's a really good example over here on the NQ because this is the last from 516 to right now. So we are just right in here, and you can see, you know, you could interpret this as moving up, but it really isn't. It's sneakily consolidating its way down a little bit. So again, this can really give you an interpretation that is very fine-tuned. And so when you get good at doing this, or if you truly want to stay on charts and you don't want to be a dome trader, this should be the thing you need. And I'll put on a couple of trades here, maybe once the market gets moving a little faster, so you can see how you can use the linear regression channels to kind of see where you want to get in and out. It helps you kind of game executions. So that's something I like about it. Okay, and let me just touch on why this trend indicator is on here. This is the Runius super trend. It's an ATR-based trend indicator. I only have it on these three charts, and I don't use it as an entry or exit signal. I just use it to watch what trend-based indicators are telling people the trade trends. That's why I use that. So for example, there's a lot of 5-minute trend traders, and right now they should be thinking that there's a downtrend that's about to reverse right here. So that's why I've got it there. It also kind of gives me a context, you know, that of, let's say I was going to try to short this with an overnight flip. It tells me, okay, you know, here that's probably a pretty good bet, but you know, if the 5-minute is telling me it's still an uptrend, I'm probably early. So that's why I've got it on there. I don't use it for really anything else. I don't use it to whether I'm long or short. I don't use it to scalp. Half the time I turn it off. It can be really useful for certain things. Like, remember I said there's kind of an undertone of buying here. You kind of can see it if you see how the trend is just staying underneath it, and that's where the coloring here can be valuable. It's getting brighter green because we're making higher highs, just barely. So we have kind of a stealth little rally going on over there. And if you were watching that on the dome, you can see these little bid ups here. So basically the buying is stronger, but it's really subtle. So somebody's lifting up the ask here, and they're doing it really slowly. Or a lot of people. When I say somebody, there's no they. I'm just saying, you know, in general, the they, the collective they. but the net result of it is positive. This is an example of where I might reset this and see if that turns around or continues. Right now it looks like it just ended, but we'll see. Okay, so that's how I use that trend indicator. It's really just kind of a sense of the trend. Don't get married to it. Okay, other questions? You guys are awful quiet considering how complicated this should be to most of you. Okay, how do I use the price action swing in correlation with 530? Well, that's a good question. Let me see how I can answer that and have a sip of coffee. Hold on. How do I? Well, basically, the numbers that are the most significant are the ones on the 5-minute with respect to those volume swings. You know, for example, 42,000 up on this big move up and then 38,000 back. You know, we almost retraced from a volume point of view the whole thing, but we stayed up here. So that's giving me, again, I always do the same thing no matter what indicator I'm looking at or what element of the chart. This is giving me kind of the zoom out, kind of context view of the move to this price point. And then if I move in, I can see, you know, the move within the move. So now that we're up here and we did those 40,000 to get up here, what are people doing? And, you know, the answer is not much. So, you know, a lot of times you see this early in the morning, we'll have a big move on news or something. And a lot of times, you know, big players will manipulate that. The algorithms will push those things. And then they'll get up here and they'll start getting short, or they'll just, you know, get out of the trade. So, so the answer again is it's context. It's comparing this to this to this. And you'll hear me frequently say that I like to compare tick behavior to time behavior, and that's what I'm doing. I'm seeing the behavior of price over time, but at the same moment, I'm understanding within that time frame how aggressive relatively the buyers and sellers are. Okay, now we're getting some questions. Jirdhar, did I answer you your question? Did that answer address what it was that you were asking? I'm going to go through these real slowly here because these are good questions. Yes, okay. And I'm also going to unmute you for a second because I would like you to please do me a favor. Girdhar, you're unmuted. Can you please pronounce your name for me?
That is called, I mean, you could call me Giri. I think it's going to be easier.
Okay, Giri. Is Girdhar is correct?
Giridhar is correct, yeah.
Okay, thank you. You're back on mute. Okay, let's see, next question. Quiet because it's very interesting. Of course it's very interesting. All this shit is very interesting, Michael. I don't understand the people that aren't participating in the Slack too, you know, I don't get it, but whatever. Okay, and also 2 other things that are housekeeping related while I'm on it. Somebody is pirating some of my material and sticking it out on YouTube. I think I know who it is, and I've been watching them, but if that's you, stop it. You know, I've been in IT for 50 years, guys. I'm not copy protecting or, you know, limiting the controls in the Slack room, but if I find somebody doing that, trust me, I will come after you like a ton of bricks. I will crush you. Okay, that's the last thing I'll say about that. One other housekeeping thing about, what is it? I forgot what the other one is. All right, moving on. Let's see. Isn't this an up thrust on the 30-second chart? Which instrument are you asking about, Summer? Testing 1, testing, there we go. ES 30-second, is that an up thrust? No, it's, yeah, on the 5-minute chart, you could say it's an up thrust, but we don't have enough momentum in the direction of the trend to conclude that, and we'll talk more about that when we talk about springs and up thrusts. Okay, Darren, is this chart setup which transfers you the dome specific enough to do 1-tick drills? I would do 1-tick drills only on the dome because that's really where you can see it, and that's kind of the purpose of the 1-tick drill, is to really get you wired in on the dome. Helios, so the LRC, we don't have to look at the direction of them, but you're close. It's what I'm saying, Helios, is that the idea is not so much the trend. However, if you see, for example, one LRC inside of the other one, both going the same direction, then obviously you have a trend, but it's not so much the trend we're looking at, it's the behavior of price very instantly and slightly less very instantly as far as range. Because remember, in order to scalp effectively or to get good executions, we're not so much concerned with the trend as we are concerned with the range the trend is behaving within. Stop for a second. Everybody listen to what I just said. Did you get that, Helios? We're not so much concerned with the trend as we are with the range the trend is in, because that's how we can get in and out of the trade. Remember, I want to get in long with the understanding that people are buying behind me. So if I'm going to enter this ES trade long, I'm not going to do it up here unless I'm really sure there's a breakout happening. On the other hand, if we pull back to the bottom of this range, which right now is about 87, and I start seeing at the bottom of the range behavior of buying, not selling, then I can kind of conclude, okay, we're respecting the range. Right now, we're not doing that. This range is starting to peter out again. Selling coming in, the volume is low, it doesn't have a lot of energy. If you look on the 5-minute, we literally have been going sideways. It's just not going anywhere. So to say this is a long or even a short would be dramatically over concluding the information I'm seeing. Remember, this is 50 ticks, so, it can be misleading. It's only showing me the last 10 minutes or 20 minutes. And yeah, there's a slight bit under the market pushing it up, but it's so slight that, I certainly wouldn't want to go in with the idea that somebody's going to buy behind me. And I certainly wouldn't want to short in front of it, because it might continue. I hope I answered your question. A lot of this, you just have to keep seeing it over and over for it to make sense. David, can you let me show how I set the second footprint on the dome? I don't know. This is me showing you guys. If you want to ask me something about your particular thing separately or ask it in Slack, I'm not sure what you're asking. I know there's a language barrier. Please try to clarify that and I'll see if I can answer it. Okay, Jurdhar, if we don't use the DOM and you just use tick charts, is there understanding use volumes? Yes and no. Okay, for those of you that are trying to understand, I'm going to switch screens again. Hopefully this dumb thing will stay here now. Okay, you should be back on my dome screen now. Are you guys? Yes or no? Yes, okay. So the idea, and please go look at the FOMC video if you really want to see this over and over again. But what I'm trying to do is show you how to use this to read this. I don't use this myself anymore. I'm over here. So it's not so much that that you can determine exits and entries as you can get a sense of the range, just like you would be getting a sense of it over here. And I can't elaborate on that more now without totally distracting from the topic as to why we're here. So I'm not going to do that. Okay. The 40 LRC is the range analysis inside the 120 on the tick. If they both correlate, is that an inflection point? Yes, Michael, it is an inflection point. You'll see that a lot. You'll see the two line up, and a lot of times you'll see the two line up at the same point that the 30-second one lines up too. And that generally is an inflection point. But again, I'm looking to see those inflection points over here on the dome, not there. So hang on one second. What screen are you guys seeing right now? Are you guys over on my charts or are you on my domes? Domes, okay. Yeah, it is like a visual dome. That's exactly why I do it. Okay, let me go back and see if I missed any other questions here. Okay, Sommer. God, I wish I could just reach out and slap you. You're still stuck on exhaustion, absorption, aggression. Okay, do I pay attention to those observing? Sommer, that's exactly what I'm paying attention to. I'm just not looking for terminology like that. I'm just looking at the behavior. You know, our let's go back over there. Are buyers or sellers in control? It's pretty easy to see. Are you guys seeing my charts now? See, in the webinar one, it highlights the screen on the presenters, so I can see where I'm at. Yes, okay. So yes, but I'm watching it, you know, in the price action. I'm not. Those of you coming from using charts have this belief that the chart is providing you information, that the indicators are providing you information that the tape and the dome aren't. And the point is they're not. It's just you haven't taught your brain yet how to see it on the dome. And I'm going to leave that there because, you know, it's seat time, guys. Are you looking for a range for range? Yes, Darren. The really short-term plays will often be fading one end of the range within the range. For example, right now, if price turned up on the ES and this buying got aggressive and volume picked up, I'd jump in long, of course. But again, I wouldn't be doing that based on this. I'd be doing that based on seeing buying right here and seeing the ask get lifted, which is not what's happening, by the way, but that's where I would be watching it. But again, I'm really trying to give you guys a mechanism to learn how to read the domes that I've found successful in teaching people before. But you know, I know some of you are also trying to, well, could I do this and not trade on the dome? Yes, you could for certain setups. Certainly the open 5, certainly the high volume reversal, but that's a bad way. You should be getting toward reading domes. That's really the place you want to, that should be your objective. Okay. Charts are training wheels. Exactly, Maria. That's a perfect way to put it. You know, a true pro, you know, if you go in the prop shops, all you see are just guys with 8 monitors and all they have on them are just hundreds of domes because, you know, after a while, your brain just learns how to do it. That's really all there is to it. All right, let's continue on. We've got other screen elements we have to cover and we're at 40 minutes already here. So let's come back up to my main screen and okay. Now you guys should be able to see my main screen. I'm going to leave this stupid floating thing here because otherwise it gets lost and I'll just let it hide itself. Okay, you guys are all seeing my domes now, right? Okay, thank you. Okay, so this is Jigsaw stuff. There are similar things in other platforms. Again, this is not, oh, we forgot one thing. Shit. Okay, there is one other thing on the 5-minute that I didn't cover, so I'm just going to drag it over and show you. This is bar by bar, and this is just cumulative delta, this one here. I've got that there. That's the only place I have it because it makes sense to have it on the 5-minute because I can see kind of the trend of the cumulative delta. And we can see that other than this one, you know, spurt of buying, nothing's been happening. That's my little reminder thing that I've told you guys about. All right, so that was the last indicator that we hadn't covered yet. Its only purpose, cumulative delta, is to see a trend in the delta. That's it. Okay, do I say yes? Cumulative delta resets on both of my sessions. So remember, I'm running dual sessions. So when we go to the regular trading hours, it's going to reset. And it reset last night, you know, when we started back up at 5 p.m. Central. Yes, that's a good question. Thank you for asking that one. Okay, so yeah, you guys ask me this a lot, but when do I reset my domes? I'm not going to explain that one today. I will just show you that live as it happens, Summer. The answer is it depends. It depends on what I'm doing and what I want to see. That's what I love about Jigsaw is these kind of immediate footprints I can get anytime I want. That's a cool thing. Anyway, I'm not going to answer that here, though. It's not relevant to this. Okay. So for every major item that I'm trading in terms of indexes, that would be the ES and the NQ, I run 2 sets of tapes. One of them I have blocks on and the other I have everything on. So that's the same for NQ. Blocks, I change my definition of that depending on how busy the market is. The real idea here is to be able to see a screen full of them at a time. So if the market's moving so fast that a lot of 20s are going by, I will bump this up to 50 or 100. But right now, it's not doing that. So as long as I can see where that big block landed in the flow of the overall, I'm happy. And so that's the only time I might adjust. See those 45 and 65? Those are right there. And so I can see those are higher than we have been, and one was on the buy side, one was a spread, so that doesn't mean much. And there's another one. Okay, so that's interesting. So that's why I do that. I'm comparing the behavior of those people playing with a lot of money to those that are not playing with a lot of money. I don't assume that the people with a lot of money are smarter than the people without a lot of money. A lot of people make that assumption that, well, if the big guys are doing something, that they must be right. Nah, big guys are wrong just as much as we are. What I want to see is big guys behaving together. Write that down, everybody. Put that on your crib notes. What are the elements and purpose? The purpose of looking at the tapes like this is I want to see behavior of, whether it is intentional or not, collusion. I want to see if there are certain people that are just collectively on one side of the tape or the other. If this is just blasting by with big blocks in green, and I'm seeing lots of one-lot sellers here, then I can conclude that the big players are doing the opposite of what the one-lots are. And whether the big guys are right or wrong, they're going to win just because they're bigger for the short term. So that's one way to interpret that. There's a lot of other ways. But again, as we go through the workshop, you'll learn more about how these things are. I'm just kind of giving you examples. Oh, we have a breakdown going on over here in NQ right now. This is a good opportunity to watch these damn things. Okay, kind of. So you can see as it's pushing down there that this is accelerating, and see all that red. So it's not like I can't see that happening on the dome, but this is just making it really visual for me. Just bigger, bigger, bigger. Now we're starting to slow down. We're starting to slow down. Are the sellers putting the brakes on? Let's see. Okay, so now we can see all that selling. Will it start turning around? I don't know. But that's the whole idea of this. We're gaming this activity. So that was a lot of people on the sell side that had an impact on the price, but it wasn't super dramatic. See? But it could certainly push us into this air pocket and set up a nice short. So that's how I would interpret that as that's happening. See how the linear regression channel is starting to flatten out within the other? And we had the first bar of buying. And so if you're short here, this is your cue to take profits, and or at least partially. And if you're looking for a long entry, this is your cue that it's about to be a long entry, maybe. Is everyone seeing that? I mean, it just doesn't get much more visual than that. See, now that we had a kind of the bunch of selling there, and it looks like they're going to try to hold that spot right there at 38.50. So that's your current inflection point right there. And so you see how, so you could have just entered and grabbed 10 ticks. You know, if you're watching this on the dome, you see it faster. It's not so much that it's better. It's just you get a sense of it. And at the same time, you know, not only are you seeing it here, but you're seeing how the other markets are behaving with respect to that. You know, are they all doing the same thing, or is this just the NQ? Was this an earnings related thing? Is this, you know, some big guy just dumped 500 NQs? Who knows? But this gives you a way to kind of figure it out. If I look at the behavior of the ES, it's holding a range pretty well, but oh, wow, that was a big one. That was 1,000 lots somebody just sold, and they didn't move the price. That's really significant. But they managed to sweep 5 ticks without moving the price. So that is a really significant event if you were in that trade. It could have stopped you out, by the way, if your stops were too tight. So that's why I don't use hard stops. That was a cool example of that. All right, we just saw a lot of stuff happen, and I'm trying to explain my tapes, but that was a really good educational event you just saw. We saw a sweep, we saw a block sell, and we saw how a giant block can influence the tape for a split second. But in the big picture of things, he did not move the price, and that is very significant. That was a lot of volume for one trade, and it showed that there were buyers willing to put a floor under this. So did the NQ. Remember I said down there that would be the inflection point, and look what happened. It's consolidating around there, and that's what that looks like over here. So now that range expanded as this one turned. So you should be able to use this to get a really good understanding of the immediate energy of buying and selling. That's why and now see over, you guys are still on the screen, right? Okay, so you can see, look at all this energy coming into selling. That's what I mean by aggression, Sommer. It's just that simple. forget all the terminology. Just look at that energy. We had that one seller kind of get us started, and now there's a lot of action, but they still aren't moving the price very much. It's trying to fill that vacuum and that air pocket, but the buyers so far are supporting the price here. So the way I just reset that is so I can see these. So you guys have asked a lot how I reset them. I want to see that block of selling, because if we get above it, we could see some of those guys go to cover and we could push back up. That would in fact be an example of playing this range and fading that edge. Okay. God, you guys are seeing so much cool stuff that we've talked about right now. This is a really good example. All right, so that's why I have these double tapes on NQ and ES. The meters over here, this fucking platform, pardon me. Horrible, gooey. All right, the reason I have meters is real simple. Again, what am I all about? I'm all about getting my platform to tell me what's going on visually really fast. So what I do is I don't have anything meters on the blocks because I can see the blocks, but what I do on the meter of everything, so this is literally every trade going by, and this is a jigsaw thing, I tell it to give me 1 meter, the one on the left. In this case, I'm running 240 seconds. Okay, so you can do your own math there. And in this one, I'm running 60. So this one's basically 4 times. So I can see that the relationship between the last minute and the 4 minutes is, you can see that buying that we saw coming in, and we can see that it's no longer coming in, but we're still not going anywhere. So if there was just a ton of selling or buying, it would first show up on this one, and then it would start getting factored into this one. It's just a snapshot in time, the last minute, the last 4 or 5 minutes. And I adjust that a little bit depending on market conditions. In other words, how far apart those two are. And on oil and gold, I just use 1 tape for each. I put everything on it because there's not so much going on in blocks that I care. And then I use slightly different settings over here for these. I use a slightly longer one. So this one is 5 times as long instead of 4 times as long. And that's just because people tend to take positions a little bit slower in oil and gold than they do in the indexes. There's a lot less arbitrage going on over there. Okay. Wow, we're at almost an hour already. This is such a complicated subject, but it's really simple. All right, let's see. We covered that, and that. Is there any other? Oh, yes, there's a couple other things real quick. Okay, so I run a market analyzer. That's this. I want to know just the instrument. Oh, you can't see that. You guys, shit. What screen are you guys on? You're on my main one. Sorry. Okay. Yes. Do I use any blocks for gold? Yes, I have it set on the tapes over here. I think I have it set for 10 and 20. Yeah, I have 10 on gold and 20 on oil. That's why these things are coming up in bold. Okay, over here, instrument, the volume, because that's important. When it's really low, you can expect to get pushed around a little more. What the change is in real terms, in terms of points, and then the percentage change, and that's on a session basis. And then I also run P&Ls for my different accounts, but that's just for reference. I also have a rhythmic, which pops up here for my other data feed. And I can use Rhythmic R Trader there if I need to. It does some cool stuff, but I won't get into that in this session. Okay, let's see. I think we covered everything there. Do I use any Okay. Sommer, please get out of the terminology and the step-by-step. I know, yes, that's what absorption means, but it's time frame relative. So, to me, absorption might be, the difference between this bar and this bar, a tick. And, to a guy trading the half-hour chart, it might be a footprint on the half hour. So, please stop using that terminology, absorption and, unfinished auctions and all that crap. It's just not relevant to what we're doing here. I understand that it has meaning in some contexts. It does not in Jeff's workshop. And you're the worst offender. You keep trying to put things into boxes, and I'm going to keep beating you up publicly for it. Just relax, learn the art, please, and talk to me offline about that. I will give you some exercises to do that. Okay, the other platform I run is this one. This is Thinkorswim, and I run Equivolume view on here. And again, it's just to get a sense of the relative volume at certain points. It's a cool view. There isn't really anything like it in NinjaTrader. There's some third-party stuff in 8. It's sort of like a footprint in a sense. But anyway, I just think it's really cool. And this is one of my favorite old indicators, the random walk index. I shared this in the group if you guys wanted, if you have TOS. I can tell you more about the development of that indicator. It's one of the ones that I've been actively using for 25 years. And then also in my TOS platform, I've got the internals. I've shown you this before. Again, that's just context. And I've got the VIX. Again, that's just context. None of that is used to make trading decisions during the day. Oh, and then there's the one other one is that heat map, which again, these are just ways to visualize the action in the market. Nothing more or less. Okay, let's see. Are there any questions about how you use this sheet? Are there any questions about any elements on my charts? Literally, you guys could say to me, we can see Haresh Desai. Hi there. You can leave it on if you want, but he's got his camera on. I can see him over there. All right. That's on one corner. There we go. Now he's gone. All right. So let's see. What I was going to say, so you should be able to, after this session, you should be able to see to take any one chart of yours or mine and stick it up there and say, okay, the exact reason I have this here is to see this. And the exact reason I have that bar there is to see that. And so if you can't do that for everything on your screen, so for example, if you've got MACD or you've got RSI or something, if you do not define exactly how you use that in a trade and exactly what edge it gives you, then your assignment is to remove it because it's not doing anything but giving you confusion points. I submit that to you from all of my experience. Trust me, less is more when it comes to all the data points your brain's trying to track. Okay, I'm going to take questions if there are any, and then we're going to wrap this one up. It's almost 6, so we've been on an hour. Questions? What is the level of importance you give to the meters related to the other elements? It's not really a question of importance. Do you know what the term gestalt means? It's the everything. Google that if you guys don't know that term. I think it's spelled like that. It's the collective that importance. So for example, one of the reasons I have all the meters there together like that is if I'm watching one thing and something happens in the indexes, let's say I'm over here trading gold. And so my attention's kind of on gold and I'm watching the flow over here and I'm watching the taper gold and maybe I'm looking at the gold chart, which is off to my right. And what I might do is just glance at, oh, wow, if suddenly these were all turning blue, I'd say, oh, there's some buying over there. And so that's really the purpose of the meters, and that's why I have them all together. Excuse me. Is the idea is to just kind of give me a sense of everything that I watch all at once. That makes sense? Let's see. What's a sweep? Oh, a sweep is real simple and very dangerous. If you've been trading only in sims, and you think it's going to be easy when you get funded somewhere, guess again. A sweep is when that happens. We just saw that in ES. An example would be, okay, right now, let's say you want to sell 1,000 lot and, you got like 100 bid here and a couple hundred more there. And, let's say you're selling 1,000. To do that right now, you would have to take out all of these levels. So literally, if I just put 1,000 on the market, it would take out those buyers, those buyers, those buyers, and it would just go whoosh, and it would literally just sweep down and the price would drop down to there because literally everybody looking to buy would have been filled by my 1,000 lot sell. Do you understand that? That is what a sweep is, Anton. They are dangerous to scalpers and, they come when they come. There's certain conditions you see them more frequently than others. Pre-market, light volume, they're dangerous. And that's one of the reasons to be a discretionary trader and not to use a hard stop. Because sometimes a sweep will just take you out of a perfectly great trade and there's no time to get back in. So it's part of risk management. Okay, so good ranges have more or less bell curve distribution. For short term, are you looking for that? Yes, yes. Within the context of market profile theory, that's a vast oversimplification, Darren, but it's accurate. Yes. You've been stopped out a lot that way. Yes, of course you have. You know, that's what happens to one lot traders, Trader PD. And, you know, that's why your strategies and your playbook have to be really tight and your risk management has to be really tight. And, you know, if you're trying to qualify for, you know, 50K top step combine with $1,000, you know, weekly loss limit, you know, one or two of those can take you out. So be very careful. You know, that's one reason I recommend, if you can afford it, always do 150,000, you know, and trade it like it's a 50. And, you know, then you'll stay in the game. And, you know, that's kind of the way Top Step's model was built. Makes some sense. Okay, this is an hour and 2 minutes. I just like to keep these reasonably short because the videos and the recordings. But if there's any other really strong, look at the energy right now in the short term and see how that showed up in the meter. All this buying here, but in the 5-minute meter, it really hasn't made a dent yet, and it hasn't really moved the price. You know, it lifted us a little bit. So anyway, this is just cool examples you're seeing real time. All right, if there are any other questions, ask them now or forever hold your peace. I may open another live session here for the open. I'm thinking about it. Mixed feelings about whether I'm going to do it, so I'll announce it in the Slack. If there's no other questions, this is going to end. Okay, guys, thank you. You're welcome.